All right, boys. King K here. I'm going to give you guys my trading strategy so we can all be on the same page. We're going to work together in this new year and we're going to absolutely crush 2025. From the bottom of my heart, I want to share this with you guys so we can get this done together. All right. So you know exactly what I'm looking for during the day. And if I'm just chilling, relaxing, just watching the charts, that means nothing is there. It means I'm not taking any trades. If I see the setup, boys, I'm going to smash a trade, okay? I really want to focus on taking A plus setups moving forward. And this is what I consider an A plus setup for me, okay? So what we have here are two different charts, okay? I'm just going to use one for now. And I just want to show you guys what I'm looking at. And then we're going to pull the second chart up. Okay, so this is today's price action. So the market's coming down, 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 down. It's trading into these 15-minute lows where we've kind of hit a wall. Okay, so once we take out a low like this, a swing low, this is where my eyes are gravitated to. Okay, so what I'm looking for is my entry pattern after we take out 15-minute lows, okay? So let me just use one chart for now, all right? So I'm looking for my entry pattern after we take out 15-minute lows. And what do I look for? I go down to the 5-minute, and I want to see an order block on the 5-minute. I'll show you guys what I consider an order block, okay? Um, Here we go. So I'm just going to play. Let's move one candle, two, okay? So nothing yet. I see the candles look kind of wicking down, all right? This is a bit of a CRT setup here, okay? So it looks kind of bullish. And the reason it's looking bullish is because this candle is sweeping the lows of the candle to the left, and the body opened exactly where this one closed, okay? So it's sweeping to the left, so this is called a CRT sweep. Let's keep it going. Okay, so here we are. The next candle's printed. Now this is what I consider an order block. So, and I would like to just highlight it here for you guys of what I consider an order block. Okay, there it is. Easy peasy, lemon squeezy. We have a red candle followed by an engulfing green candle. Okay, that's what I consider an order block. All right, we're going to go down. We'll play one more. Okay, boom. This one went red to green. Okay, these lows are still intact. These lows are fairly safe down here after sweeping this candle. Okay, but I'm not worried about that. I'm really looking for this setup, and now I have my framework of what I'm going to be using to go long on this. Right. So now what we have here, okay, is we have a space between these two candles, which I call a void. Okay, we have a void, which is showing a bullish open of this particular candle. Okay, so now I go down to the 1 minute. I'm looking for an entry on the 1 minute. So I'm looking for a break of structure, a fair value gap, and then I'm looking to take my long position. So we have a fair value gap here. Okay, I'm just going to turn this to a different color so you guys can see it. Yellow, let's go blue, terrible, dark blue, perfect. All right. So these red bars, these are just voids or spaces in between the two candles on the 5-minute. Okay, so I just have them highlighted there for now. This one's already there from earlier where I had it saved, but I'll show you guys where the candle will print here in a moment. So this is the fair value gap that we want to pay attention to. So fair value gap. Okay, so this is where we want to go long. This is where we want our long entry to be. So if I just do this, I put this green, make it like that. That's where we want to get filled to go along. You can have your entry at the 50% of the fair value gap. You can have your entry at the neckline of the fair value gap. So sometimes when you guys see me bottom tick or top ticks entries, it's because I'm literally having it on the order block itself. Okay, so if you really pay attention, this this order block on the 1 minute is similar to the one on the 5 minute, right? So it's duplicating itself. So this is giving me a little bit more confluence to believe that the price is going to go higher. So I'm going to set my entry on the fair value gap, and I'm going to do, let's say, the 50% of the fair value gap. Ideally, I don't care. I'll go at the top of the fair value gap just to ensure I do get fill, so I don't get missed, right? Or the price misses me, and I, you get a little upset when that happens, right? So you can do 50%. You can do the neckline. The further down you go, neckline's the max you want to go, the less likely it is for you to get filled. So the top of the fair value gap is good. The 50% is even better for an ideal entry. Okay, so let's go back one more time to the 5 minute. Oh, by the way, most important, you need a break of a structure. So I'm sure you guys understand swing highs, swing lows by now, but here is a swing high, right? That's a swing high on the 1 minute. So that means the price needs to break above. Okay, so here we have the price breaking above. Now that we have a structure, the candle closure above. I don't consider a wick going up and coming back down. I look at where the candle is closing. So the candle closed above the swing high. That is considered a break of structure. So let's go back to the 5 minute and see how the next candle prints. Boom, it comes down, hits the void, and then bounces back up, and it prints another void, which is really nice. So that shows a little bit more bullish momentum. Okay, let's go again. All right, big red candle coming in, gets bought up a bit, and let's go back down to the 1 minute. So where is our entry? Our entry's down here. Okay, the first fair value gap. Yes, this is also a fair value gap going up, right? But I want the first fair value gap after my bullish 5 minute order block. Okay. And ideally, I want to see price come to this fair value gap or even hit this neckline and reject it fairly quickly. So I'm going to go back to the 1 minute. Here we go. And let's see how the next candle plays out. Okay. Perfect. So it's still up there, So don't worry, I got my orders placed, right? And I'm waiting. That one looks okay. Looks like price might want to come down to us, and boom. So we get filled on this candle right here. Hits the order block neckline on the 1 minute, and it comes directly on the 5 minute, right? To the same neckline. Perfect. So let's see what happens afterwards. Oh, by the way, when I'm trading, guys, I'm only trading and looking for something super silly, but it's a ones to two. Okay. So my stop loss, and it's super important you guys have a game plan in mind of what you're looking for. My stop loss is just going to be these swing lows. And it's the swing low of this, sorry, my apologies, just going to be the low of this candle of the order block. So this low here. So that is my stop loss always. So on my 5 minute order block, whatever candle's not engulfing, so in this case, the green candle is engulfing the red candle, I'm putting my stop loss at the lows there. Okay. That is a decent stop loss, and I'm only looking for 1s to 2. I'm entering on the 50% of the fair value gap, or you can even enter at the top of the fair value gap. It doesn't matter. It's only a couple dollars difference. Okay. And now I'm looking for 1s to 2. So where would that be? Right about there. Okay. Ideally, you might want to take it at some significant buy side liquidity, right, or sell side liquidity. You know what I mean? Up here would be a nice liquidity area. A good rule of thumb is when you're trading, a good way to exit if you have a big range like this, and you don't think price is going to go all the way up. You want to sell once the price or close your position once you're at the 50%, just a little bit above that 50% equilibrium, right? So when price retraces and gets into like a discounted zone, that's ideally when you want to get out of the trade. So you can ride it all the way up to like the 50%, no problem. Okay. But ideally, I'm looking for 1s to 2, but we'll just see if we can hit this 50% for now. And that's a good place to take your trade off. Okay. Because price tends to reject that 50%, or if this is considered a discounted now up here for shorts, then they probably might see price reverse down. So let's take a look and go back to the 1 minute and see how we're trending. Okay, so let's go. Let's get it done. Boom. So we're in. Oh, geez, we're in drawdown. Oh, we're green again. And price is now rocking. Okay, looking good. So we have our framework done. Oh, that's the fill right there. That was the fill. So if you're counting minutes, fill here, boom. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minutes we're in this trade, and we're hitting the 1s to 3 rate. But if we bring it down to the 1s to 2, this is what I normally would take. Then we're hitting this one a lot sooner. Well, actually just 1 less minute. Okay, that's it, guys. Simple and easy. Okay, simple and easy. So you guys need to study this. You need to take a screenshot of it. I post it all the time in the Discord. If you ever wonder, like, hey, what's this guy talking about? This is what I'm talking about. Okay, so we have order block. Okay, 5-minute order block. Avoid. Okay, all we need is 1. Then we go down to the 1 minute. So it's all printing at the same time, right? So you can see where this arrow is, like my crosshairs. Price goes up. We have the entry in the fair value gap. We have the stops at the lows. We get filled. Amazing. So if price ever breaks below and keeps trading down here, then unfortunately that trade is usually a dud. You know what I mean? If price hits the fair value gap, rejects fairly quickly, then we're in it to win it. Okay, and then you can hold it until your 1s to 2 or 1s to 3 or the 50% of this range, right? The 50% makes sense. It actually went even higher. Yeah, it went a lot higher, right? So there's a lot of meat on the table on this one, left on the table actually, and that's okay. It's totally okay to miss out on trades. There's nothing wrong with that at all. Looks like it kept going quite a bit. Yeah, so I was already out. My computer's already off. You know what I mean? So it's not really a big deal. Markets are closing here anyway, so the market closed at 1600 hours. Okay, so let's see what that would have been if you held to the close. 50%. Exit there. All the way up to the close. Almost a 1s to 6. 1s to 5.97. All right, so that's what I'm looking like, guys. Thank you so much for tuning in. I'm happy to share this with you, and let's work together and let's look for these patterns. Let's look for this entry model. Void gap, 1 minute entry. Okay, void gap, 1 minute entry. Break structure is important to confirm the market to change directions for reversal. So couple different things. I'm gonna write it down here. 5-minute order block. Okay, that's part of the checklist. So this is the trading checklist. Okay, 5 minutes order block, 1 minute fair value gap, plus a break of structure. Okay, voids are good too. Okay, and then the entry on the pullback into the first fair value gap. Okay, and if you actually think about it, right? Let me just bring this up here. The fib from the top to the bottom, right? We want to get into the fair value gap that is a discounted fair value gap, right? But we really don't even need to draw the fib on this one to find out where entry is. It's very straightforward. So thanks again, guys. I want to post this up for everyone to see, and let's all get on the same page. We know what to look for. Let's get it done.